So things are starting to defrost here in Astoria. It's still pretty frozen. The ice layer here on the streets is still really thick and it's raining. So it is like slick as slick can be right now. I don't even know if I can get it back up to the main drive. There's a little bit of a dip down here where I'm parked, so I got to drive back up a driveway here, and I don't know if I'm going to be able to make it. I might have to wait till this afternoon to, yeah, to get my Explorer out of here. But we went through like 5,000 pounds of ice melt in the last 2 days. It's just fun to watch the unpreparedness for such conditions around here. It's pretty funny. So many people like just had no clue of what it is that they needed to do in order to try and travel, to try and get their vehicles off the hill, to try and get to work. Everybody was just like, what do we do? Pull our hair out. But it can rain 12 inches and nobody even notices around here. But if it freezes, we're done. Right? So, okay. Got a bunch of people in here now. Okay. Let's talk about the home builder sentiment. This is, hey, what's happening all night? Great to see you here, man. Home builder sentiment. Now, the home builders index, right? This is something that, like the Case-Shiller or, these people compile like these ideas of what it is from across the nation. These builders, all these different builders, they get the impression of what it is that they are feeling out there, right? So they have like, say like a questionnaire for them to follow, so to speak, so that they can get an idea from these different regions on what it is that's happening. So now this builder sentiment, it's at 44 right now. Right, on the index. Anything below 50 is negative, anything above 50 is positive. So they're still negative on their sentiment, but it's getting closer to that positive, right? And I'm under the impression that once we go positive with the home builder sentiment, you're going to start seeing lumber prices take off. But right now, the home builder's sentiment is still negative. There are parts of it that have gone positive though. There's 3 different conditions that they are looking at: sales conditions, sales expectations, and buyer's traffic. Now, the buyer traffic is by far the deepest into the negative territory. It's at 29 right now, but it has moved up quite a bit from where it had been, over the previous months. Increased 5 points over the last months, which brought us up to that 29. Sales conditions, it's moved up 7 points up to 48. Still negative, but almost about ready to go positive. Sales expectations has gone positive. Now it's at 57, moving up 12 points, going from negative to now positive in the sales expectations over the next 6 months. Now that sales expectations over the next 6 months, I think right here is the impression that a lot of people have that the Federal Reserve is going to be lowering interest rates going into the near future. And with this idea that the Federal Reserve is going to be lowering interest rates going into the future, buying a house now or here quickly will give them the opportunity to refinance as those interest rates come down. I believe that this is the perception of a lot of people out there. I think this is a very misguided view. All right, I believe that the Federal Reserve is going to keep interest rates elevated for a significant amount of time, and the amount that they do bring down is probably not going to be so significant that a lot of people are anticipating. However, that doesn't stop people from going out there and participating within the economy, within the markets, with that idea in mind. And I feel that that's what's really happening right now. In fact, you can even read that within the article that I leave down in the description, that a lot of people are feeling that very thing, that the interest rates are going to be coming down, and that's going to be a boost for the ability, or a boost, it gives them the ability to refinance, or gives that, boost to the housing market, bringing people off of the sidelines, right? Kind of thing. Again, like, I feel like all this is going to be very misunderstood, right? And now, something that I find very interesting within the whole narrative is that once the interest rates came up, that it was going to crash the housing market. Like, all the home prices are going to come down. Nobody could afford the higher interest payments. Nobody could afford the higher prices. None of that took place. Like, there are places where the housing prices did come down and came down significantly. But for the crash, like the one that everybody was anticipating, it never did occur, right? And a lot of people kept saying, like, man, this is going to be worse than the great financial crisis. It's going to be, all that stuff. I mean, I was one that was pretty much in that belief a couple of years ago prior to buying my home. Like, I mean, I bought a house just before the interest rates shot up. And I thought for sure, once the interest rates go up, these home prices are going to come down. I'm going to end up underwater. And that's the way I felt. It didn't take place. It didn't happen like that at all. So I had to readjust what it is that I believed that was going to take place. Like, I knew that the Federal Reserve was going to unwind their balance sheet, releasing a bunch of mortgage-backed securities into the market. And that right there had me believing, right? It was just like, man, if the Federal Reserve unwinds their balance sheet, releasing those mortgage-backed securities into the market, it is going to flood the market with mortgage-backed securities. The price of those things are going to fall and the interest rates are going to shoot up. And that is really what I believed, and it did somewhat occur that way. However, it didn't go to the point that a lot of people were thinking. They were saying 15% on a mortgage and stuff like that. Now, 8%, 7%, even 6%, that's pretty high, but historically looking, that's not really that high. I mean, that's somewhat actually pretty decent considering what we have experienced in the past, minus the last 10, 15 years, right? So when we're looking at the interest rates where they are today, this to me is very much where the market wants those rates. Like the Federal Reserve, when they were raising their interest rates, going, every quarter, moving it up, a lot of people said, man, as the Fed's raising these rates, it's going to raise the mortgage rates, going to crash the markets. The Fed started to raise rates and the mortgage rate shot up, but then plateaued off. Like, that's it. Man, I mean, they fluctuated. They will go up and down a little bit, but they weren't like keeping lockstep with the Federal Reserve. Like they disconnected from the Fed. So I knew then, it was just like, okay, now we got something different happening here than what everybody was anticipating coming from the great financial crisis. Right? And everybody was just like, sure, right? This is going to crash the market. But it didn't happen. Now I get to thinking, like, why? Why didn't it crash the market when the Fed goes to unwind this balance sheet, releasing all these mortgage-backed securities into the market? It just made sense that it would crash it. Well, the difference is that the interest rate shot up so much that people quit refinancing, right? Like, why would you refinance into a higher interest rate? That didn't make sense. I mean, unless you absolutely had to do it, most people probably wouldn't. That right there, that refinancing, brought the mortgage-backed security level, like the amount of mortgage-backed securities out there in the market, it started bringing it down, right? So there was less mortgage-backed securities now flooding the market. This is something to think about because now all of a sudden you have investors who are looking at those mortgage-backed securities, right? And yeah, a lot of people believe that they were toxic from back in the day, experiencing from the great financial crisis. But most of the mortgages that are being issued today are going to the most qualified people. Right? Like they aren't issuing out toxic mortgages, toxic mortgage-backed securities, like they had before. That thing was from the past. So these mortgages that are out there today are most likely going to get paid. And the investors know that. Like, there's people out there looking for fixed income investments, and the mortgage market is generally a decent place to be because most people make their payments. Right? So if the investors are out there looking at those mortgage-backed securities and say, man, that price has fallen and the yields are right on, that's where I want to be, and they start buying in. Now you have interest rates that are only going to go so far, regardless of what the Federal Reserve was doing, right? Because they were ticking interest rates up, but the mortgage market found its level. Right? Now, this is something interesting to think about because the Federal Reserve has stated in the past that in order for them to have a functioning monetary policy, they have to have a functioning mortgage market. Those two have to work together, right? So if the mortgage market freezes up, the Federal Reserve essentially becomes ineffective, right? Their monetary policy no longer works. I mean, this is coming straight from the Fed. In fact, if you guys really want to dive into this topic, because I only have, a half an hour, I only got maybe about 15, 20 minutes here. If you really want to dive deeper into this topic, consider joining the channel. Tomorrow we're going to do a live stream after work, probably about 4:30, 5 o'clock in the evening on the West Coast here, Pacific time. And we're going to break this stuff down. I got a Michelle Bowman speech from 2020 talking about the housing market, talking about the mortgage market and the needs that they needed within the mortgage market during the time. Like, this is good. A lot of times when that stuff is being stated, we don't really recognize what it is that's going on. When we go back and read it again, we can totally see it because of, the outcome that came from it, the timelines, right? So we're going to break down Michelle Bowman's speech from yesterday and a recent one that she had given. And we're going to really, dive into this particular topic, the mortgage market being a necessary functioning system for the monetary policy to work, right? And when people think about that in a fashion of like the mortgage market freezing up, that would be like a death sentence for the Federal Reserve. Okay. And this is where, like, a lot of times when we think about like the crashing housing market, a lot of times people aren't considering that the Federal Reserve would lose their monetary policy. They are not going to allow that to just take place, right? If we could see it, if we can state it, right? It was just like, oh, this is going to happen, followed by that, by this, and the Fed doesn't know what to do about that. Most likely they do, right? I mean, they have 150 of the top economists working for them, right? And their job is to look for scenarios in which that they could create the tools, the backstops, the situation to deal with those like problems that are coming. They're not going to be taken by surprise. This is like, I'm not trying to defend the Federal Reserve, but what I'm trying to get at is the things that I have read tells me that they have tools, they have policies in the background waiting for certain things to take place, those crisis situations, in order for them to deploy those tools. Okay. And this is really where I think that if you follow the Federal Reserve in their speeches, it is dictated within them, right? So join the channel, right? Join the channel. We're going to get together tomorrow afternoon. We're going to answer all the questions. We're going to go through those speeches. We're going to really break this stuff down so that we understand what it is that's going to be taking place here, because it didn't happen the way that a lot of people said it was going to. Once the builder sentiment turns positive, completely positive, you're going to see a build on like you would never believe. Like, in my opinion, it's going to be on. There's a shortage of housing, right? The inventory level is still completely low. The housing prices did not crash the way a lot of people were anticipating they were going to. The idea that refinancing is coming into the future, well, I mean, you just line this all up. What does it say? Right? It says that there's probably going to be a housing boom. I mean, that's the only thing I can think of. Okay? A lot of times people will even look at it right now saying, yeah, the builders are in the toilet, right? But that's not really the case. I mean, look at like building permit issuance right now. Building permit issuance is about as high as it was prior to the pandemic. Right? That's something to think about. Like, there is much building permit issuance taking place right now than there was prior to the pandemic, just before the pandemic was. So if there's any kind of like incentive to try and get the build on, can you imagine with all the pent up like demand that is taking place right now, what that could do going into the lumber market? I mean, consider this for just a minute. Like, I work at a lumber yard. I do retail sales for a living. I do a lot of orders for the yard itself, for like our stocking of the yard. And right now it's difficult to source out like wider boards, like the 2x10, 2x12s, and the longer lengths. There's some issues like just trying to source out like things like, in a truckload of pre-cut studs or something like that. These things are available out there, but they're not like bang, like get it right now kind of stuff. Like, you kind of have to search for it, wait for it, give it another week or something. This, to me, when I see this, leads me to believe that there is a very tight inventory when it comes to the lumber market as well, right? Like, they're only producing what it is that they can sell out there. And so if we have any pop to demand, if this home builder sentiment starts to turn positive, right, and the speculation starts to get on that these builders can build homes with the idea that they're going to be able to sell them into the future for the price that they are projecting today, right? You're going to see a lot of people start going into this. The house prices are expensive, right? Anytime you see a product, it doesn't matter if it's homes or cars or eggs or anything out there. If you start seeing that price move up dramatically, you're going to start seeing investment pour into that particular product. And that's what I anticipate is going to be coming to the housing market. There has been a gap in production taking place. Think about that. right? That permit issuance, if you go and look at the Federal Reserve chart, just type into a Google search permit issuance, FRED, right? And it's going to bring you up the Federal Reserve permit issuance. They're going to show you a graph on that. Take it back like the last 10 years, right? And you can see a steady increase in permit issuance. That's going to continue upward. Okay? It's going to continue upward because of the demand for homes due to the lack of inventory that's existing out there. There's a gap in production that has happened. Right? That gap in production is going to reflect into prices. Home prices are most likely going to stay quite elevated going into the near future. I know there's a lot of people out there who are going to be like, dude, what about the demographics of people? People are going to go into recession, not going to be able to pay. They got all this stuff that they keep talking about. But a lot of times when I hear that stuff, I don't hear the consideration that, what is it, 30% of homes right now, one out of every 3 homes is sold to all cash buyers. Like, they can care less where interest rates are right now. They're willing to pay at this price. Think about that. Like, how set are those prices going to be in those homes if a third of them are going to all cash buyers? That doesn't give a whole lot of room for home prices to come down. Not to mention how many homes are outright owned. Right? Why would those things come up onto the market? They're not going to. People talk about how the demographics, old people are going to end up passing away. This is a big one, like the boomers, right? The boomers are going to die and they're going to leave these houses out there. How many people, or how many homes have multi-generations living in them? Right? See, even if say the owner of the home is older, and they have adult kids living with them, right? And they pass away and those adult kids can't live there. Well, they got to find some place to live, right? Even if this house comes up available, those people have to look for another place to live. It doesn't lower lower the demand. That increases the demand, in my opinion, right? So all the different things that I see going on out there, I don't find where the home prices are going to crash in a way that a lot of people thought that they were going to. And in fact, I see where the demand for homes is not only going to be quite prevalent over the next year due to that gap in production, but it leads me to believe that the home prices are probably going to increase, especially if the idea that interest rates are going to come down and the mortgage market actually reflects that with lower interest rates. Yeah, I think that the pent-up frustration of people not being able to afford to buy a home is going to start flooding into the market. Yeah, that's my opinion on it. It's the things that I see. I asked the guys at work, I was just like, what do you think? I mean, is the housing market crashing, or is it gonna, are we gonna start seeing a build on? And from everything that I hear and talk with everybody that I work with, they feel maybe not exactly this moment, but coming into the next few months, they all sense the same thing. There's gonna be a build on. People are gonna start building homes. And it makes total sense to me. All right. Again, with that gap in production that has taken place over the last couple of years, you look at that building permit issuance, right? It was a steady climb until it hit the pandemic. It spiked, and then it kind of went flat. Right? Well, that trajectory of continuing, I think that's going to start taking place again. Right? And you're going to see more building permit issuance. You're going to see more demand for lumber, building supplies, all that stuff. But I'm not seeing that until the builder sentiment goes positive. And it's about ready to. It's getting close. And I keep telling people, if you need lumber, now's the time to get it. It is about as cheap as it's ever going to get right now. Right? Tight inventory levels out there. Not a lot of demand, coming from like even the retail side of things. It's going to change. That's going to change big time. All right. I've been babbling on. What are you guys talking about? Okay. Let me go to the cruise down here to the bottom. All right. This housing currency crisis feels and looks a lot like Venezuela. Everyone's starving in their $1 million homes. We call it a crash up. Japan showed us what they looked like in the 90s. Yeah, I think we're in a different situation than Japan or any other nation that's out there. I mean, comparing ourselves to Venezuela or Japan or the Weimar Republic or Zimbabwe or something like that, all these hyperinflation scenarios, or in Japan, for instance, it's a deflationary scenario, but all these scenarios that take place with these currencies from these other nations out there never had or are going to be a world reserve currency. And that's a major difference to our dollar comparatively to all these other nations. Like comparing us to the Weimar Republic is not even the same thing. Like when you have as much demand for dollars that exist outside of the United States as occurs right now, I mean, you think about it, you could type in, to pick out any one of the BRICS nations, like except for maybe Russia, right? But pick out any one of the other BRICS nations or any nation that is involved with the BRICS nations. It doesn't matter, right? Any one of them. Type in Brazil, then type in dollar denominated debt. Type in India, dollar denominated debt. Type in Turkey, dollar denominated debt. Argentina, dollar denominated debt. Type in any country you want dollar denominated debt. You're going to see all these nations. Every one of them is taking out debts in dollars, in US dollars. That means that if they are selling bonds to the market, they are receiving dollars, US dollars for that. When those bonds come due, they have to have US dollars to pay those bonds back. Those bonds are issued for like the next 10 years. So for the next 10 years, at least, Brazil is having to come up with dollars. Now, if they are doing all their transactions in rupees or rubles or yen or yuan or anything outside of the United States dollar, what are they going to do to acquire the dollars they need to pay back those debts? Right? People told me, well, they'll just default on them. Well, who do they say? Okay, how about this? How about we just chop our own, okay, never mind. You can't do that because what it will end up doing is ruining your credibility, right? To pay back debts, and nobody's going to loan you money anymore, right? You're like, all your bonds are worthless, and nobody's going to loan you any more money. So you can't just go out there and just default on your bonds, right? It's like defaulting on your loans and expecting people to loan you more money. It's not going to happen, right? So it's going to be very critical for them to pay those bonds back, right? And if they're going to do that, that means they have to acquire dollars from somewhere. How is it that you're going to acquire dollars? You sell your stuff, your commodities, your exports for dollars, right? Yes, the whole BRICS nation things is taking place. Like those transactions are occurring out there. These nations are trying to figure out how to do deals outside of the dollar. The only problem with it is it doesn't work out too well for them, right? And at the end of the day, all of them would much rather be dealing with dollars because everybody wants dollars. You look at Russia sitting on a bunch of rupees, they don't know what to do with them, all right? Like all of a sudden now you got a currency you can't, like, it only works in one place. It's like getting a token for a particular business and then having like your entire wealth in that token. Like what difference does it make? You can't spend it anywhere else. It's the same thing, right? And so when I think about like these other nations, when they are doing those transactions outside of the dollar, they are trying to figure out any way to do transactions, right? The Federal Reserve is reeling back, like they're pulling back on the amount of currency that is in the system. Quantitative tightening. A lot of people don't want to think that. Like they don't believe it. They say the money printing has just gone crazy and they're still printing. They're not. Like they're going completely the opposite way. They are pulling money back out of the system. Quantitative tightening, right? Now that quantitative tightening is leaving less liquidity out there in the system. Right? Less dollars out there to do transactions with. If there's less dollars out there to do transactions with, that gets very difficult for people to do international trade. They need another system out there. Right? The United States cannot possibly provide the world with enough liquidity, with enough dollars for them to do all the transactions they need. Right? I mean, as much as I think that the United States would love for that to take place, right? Because if they have the ability to freely spend money with any country out there without ever having to actually work for it, why wouldn't you do it? And if the people out there are demanding some way to do liquidity and you can provide it for them with the dollars, then that's what we're going to do. Okay? So now we look out there and we say, hey, the Federal Reserve is pulling the dollars back in. That means there's less dollars out there in the world to do transactions with. They better figure out another way to do transactions or else they're going to start going broke, right? I mean, if you ain't working and selling, what are you doing, right? You're going to end up sitting stagnant. Well, that's the problem that they see out there. And I know these nations see it out there. And I know the Federal Reserve sees it out there. And it's one of the reasons why I almost feel like the BRICS are a brainchild of the Federal Reserve itself. They were like, man, we're gonna screw it. The United States cannot possibly go into the amount of debt that is going to be demanded in order to have that safe and liquid asset like the U.S. Treasuries, that collateral. And there's no way that we can continue on with the deficit spending or trade imbalances in order to get the dollars out there to the rest of the world. This whole thing will not last. It can't. The Fed knows it, the government knows it, other nations know it, everybody knows it, right? That eventually that system will collapse. So unless there is something like a digital currency out there, unless the negative interest rates, unless something like that is to occur, there is no way that the Federal Reserve, the United States, and the amount of demand for the world reserve currency can exist. I mean, it's just like it would completely screw the entire system up. So by having these other nations start to do transactions outside of the dollar, it actually creates a situation in which that puts relief on the Federal Reserve saying, great, now we don't have to provide all these damn dollars to everybody. Okay? And there's going to be demand for it because you can see it right there within the BRICS nations themselves. They are taking out debts in dollars. This is not, like the more I look at this, I don't see them battling. I see them working in cahoots. You know, this is like, you know, this is they would never be able to pull it off if that's the way we knew it. If we knew that they were working together, it wouldn't work, right? But because they are battling, or it seems like it's a battle, then they can pull it off. It's like professional wrestling, right? I mean, those guys are all bros in the background, right? And backstage, they're like, you know, giving each other high fives. Hey, man, great show, right? But out in the forefront, they act like they're going to kill each other. The Democrats and Republicans are the exact same thing. Like, I mean, world leaders, I don't see any difference in this. Like, they all do this thing. If we can recognize it, if we recognize what's happening out there, and we can see that there's, you know, if we can figure out the Fed strategy, if we can kind of anticipate what is going to come from these BRICS nations, especially when they're taking out dollar-denominated debt, we know that they're not getting out of the dollar, right? I mean, we can just see it plain as day. I mean, holy moly, I got almost 300 people watching. Thank you so much for being here, man. I mean, I'm just babbling off, so I don't even know what I'm saying anymore, right? No, I'm just kidding. We got 294 people watching, 67 likes. I'm at 27 minutes right now. I'm going to give it like another 10 minutes or so, and then I think I'm probably done with my lunch. But this is a really fun live stream. I see that there's a lot of people watching. The dollar is our currency, but it's their problem. It is. Let's see. Charlatan Zimmerman, I suspected gold will hit 23 to 2400, then huge sell-off to 1200 as the recession sets in. I don't think we're going to have that recession. I think we already experienced the recession. I think the recession took place during the pandemic, right? Because what's the worst part of a recession? I mean, I've said this many times before. It's when you lose your job, right? That's probably one. And they bail out the corporations. Everybody hates that. Like, people hate it when the corporations get bailed out. And personally, you hate it when you lose your job. I mean, I don't know if you lost your job, but I've lost my job in the past. That sucks, right? It's like the worst thing that could possibly happen to you, right? So when we think about like what is occurring right now within our economy, we just came out of the quickest, deepest recession in history. It was self-induced and planned bailout. Like, I don't care what anybody says out there. There is no way that the government, that the central banks around the world, that all these people were able to work in lockstep as quickly as they did without a set plan in motion. They knew it. They had to have, right? Because of the dramatic speed in which that all the stimulus packages were deployed, they had to have that plan in place. They had to know it. Like, whether or not they were planning a pandemic or just knew that if a situation of this magnitude occurred, they had these particular tools that they could deploy. Either way, it wasn't done on the fly. That's where I guess I'm getting at, is that these people had an idea of what it is that they needed to do in order to deal with the situation that was coming. The Fed knew that they were going to run into the lower bound of zero, right? And that stimulating the economy with lower interest rates was not going to be an effective tool. They knew this. They knew this ahead of time. They knew it from 2018 from this speech, Monetary Policy for a Low Neutral Interest Rate World. So long before COVID, they knew that that was going to be a problem. Right? when they launched those special purpose vehicles and all those stimulus packages and the situation that arose from it with the tight labor market, this created a situation in which that the length of time after that, in which that the problem of a recession would occur, mainly bailing out corporations and the people losing their jobs, would be so far out there. By the time it actually happened, it would already be over. Now, I know that's weird to think, but that's the soft landing, right? If you see it, okay. The corporations got bailed out during the pandemic with the special purpose vehicles. We've talked about this many times. It was a credible threat coming from the Federal Reserve in which that they established a entity that is separated from the Treasury and from the Fed. They funded that entity with hundreds of billions of dollars, telling the market that they are going to be buying corporate debt with this. Hundreds of billions of dollars diving into corporate debt. The markets flipped out. I mean, I was one of them on YouTube saying, hey, the Fed's going to be picking the winners and losers with this particular special purpose vehicle, this entity with hundreds of billions of dollars. They bought a little bit of corporate debt, and the markets flooded into corporate debt. They started buying this stuff like it was going out of style. Corporations gorged on incredibly cheap debt. They were able to take out loans, sell bonds at a high price with low yield, and they were just gorging on this stuff. Once you have cash, what do? You have to buy equipment, spend the money on something, maybe hire some people, right? So these corporations all of a sudden started loading up on employees. This is when we lost all the service industry jobs, right? Everybody moved up into these corporate jobs. I heard of people getting jobs without degrees and stuff like these high positions at these corporations. It's no wonder why we see so many layoffs from these people. But that's really what it exposed it. Now, a lot of people want to say, oh, it was just retirement and all this stuff. Okay, that's cool. Yeah, that contributed to all the stuff, the lack of training, the retired people leaving the workforce for whatever reasons. However, these corporations blew up, right? And now, as they start to fail, those people who are losing their jobs are going to go to work at the service industry. So then the unemployment rising because of all the layoffs from the corporations failing isn't really going to rise that dramatically considering how many service industry jobs that were available out there. Right? So this is the part, the unemployment part. Unemployment rising pisses people off. But if it doesn't rise, right, then we really have a recession. And then these corporations, since they were already bailed out, they're being allowed to fail right now. Right? I mean, you see it all over the place. Bankruptcies. I was reading an article out of Germany or something. The same thing is taking place there. Like, corporations are failing. They were, overexpanded during the pandemic due to all the stimulus and stuff that came out there. This overwhelming consumer demand that was completely false. Right? These corporations invested into that idea. Now they're failing. Okay? So when I think about that, how is this recession really going to look if nobody's really losing their job? Although people are losing their job, they're finding it over at the service industry. Again, if unemployment doesn't rise. Is it really a bad recession? And if the corporations are allowed to fail, where's the recession? Right? And see, this is where I think like it was already pre-bailed out. Right? This whole thing. So I don't see it happening. I don't think there's going to be a recession. Not like what a lot of people are thinking. All right. Wow, so many people up in here. Thank you so much for hitting that like button. We got 283 people with 95 likes. Let's get it up to 200 likes before I end this stream. That would be so awesome. All right, Lumberjack Landlord, great to see you, man. Hey, by the way, I got my tickets for Vegas. I forget I'm flying in kind of late that night, but I'm looking forward to going down to Vegas next month for the One Rental at a Time conference there. Stay curious, Rod. Being 6 years early leaves a lot of wealth on the table. Yeah. All right. But just the fact that Dave Ramsey is not buying and said it, that should be a clue. Dave Ramsey does not impress me. He impresses a lot of people out there, and that's cool. That's cool. But Dave Ramsey, in my opinion, doesn't really have like the working class stiff guy like who doesn't have, okay, let me see if I can put this right. I'm listening to Dave one day and somebody's asking him his advice about buying a house and in the condition that it was at the time, and he goes, no, there's no reason why you shouldn't buy a house if it's this much of your income and you can put 20% down, and he lists off all this stuff, and I'm like, bro, I don't know a single person that's in that condition. Like, I don't know a single person who you just described, right? That could do this. And so when he's saying, oh, it's no big deal, sure, that's not, and I mean, yeah, you just do it this way. Come on, man. Nobody lives like that. And then another thing, like, he has like absolutely no love for gold whatsoever, right? And now I understand like asking somebody as far as like, is gold a good investment? If you are an investor, I could see why somebody would say, no, it's not a good investment. But it is a good purchase. It's a good insurance policy. It's a good speculation. And it's definitely the only thing that you could really have that gets you out of that third party claim, right? Meaning that you don't have to worry about, government protecting your property, or somebody like screwing up a banking system or something like that. Like, you don't have to worry about anything out there in the system, right? It's your wealth secured by you. There's nothing else that really can do that. Maybe cryptocurrencies on a lesser extent. So to say that it's worthless or that it's stupid and doesn't make any sense, like, I mean, I don't have any appreciation for that. Like, I understand how valuable to a working class person having a stack of silver can be. It saved my life one time. Like, I mean, literally saved my bacon. I had no car. I was broke. I had to get to work, and I had nothing. I had no money, no credit, no abilities. But I did have a stack of silver, right? And when I called my buddy up who had a Tahoe for sale, and I said, dude, will you take silver for that Tahoe? And he says, man, you know it. So will you drive it up here? And he says, yeah, I'll be there in a little bit. He comes up, I give him 165 ounces. He signed over a title to me, and I thought, man, I will never be without silver again, right? It is by far one of the most important things for an individual to have. I mean, in my opinion, you don't have to have tons of it, right? Buy an ounce a month, buy an ounce a week if you can, right? Stack that stuff up. If you ever come into incredibly hard times, you will be very, very thankful you had it, right? I mean, yeah, there's the possibility $500 an ounce and all the other stuff and, whatever. I mean, that's cool. I mean, if that happens, cool, right? But ultimately, that insurance policy, that peace of mind, that ability to sleep at night, man, that is so worth it. And for somebody to call that stupid, I'm out, man. Like, I mean, I need somebody who's going to be a little bit more appreciative of that kind of thing in order for me to follow the rest of it. So anyway, I don't mean to go off on him about that, but that's really just the way I feel. Alrighty, guys, I got about another 5 minutes here, and then I'm going to be done. I'm pushing this already. All right, watched. Yeah, thanks. I usually get an hour, so I'm okay right now, but I got about another 5 minutes. I got to bail. Stay curious. Don't need Dave's help. He's been plenty wrong on real estate. Yeah, real estate investments. Yep. Simon is a stud. Dave Ramsey is awful. Thank you, Lumberjack. Yeah, I'm not saying like he doesn't have good ideas as far as investment and like, especially like his ideas of getting out of debt. Like, I'm totally on board with a lot of that stuff. But like I said, there's a couple of things that it only takes a few times of me hearing something to say, okay, well, you're all right, man, but I'm out. I'm not gonna go that way. Right? And that's one of them, I mean, one of the things that got me like before, and I don't mean to talk down about Donald Trump or anything else like that, but one of the things that I heard him say in an Alex Jones interview, right? Alex Jones was interviewing him before he was president. And I listened to the entire interview, and he said two things that really just got to me. And I was just like, I don't like this. This is one of the reasons that I became a constitutionalist, is because of those statements right there. And what he had told Alex Jones is that, one, he was going to be the most surveilling president ever, meaning that he was going to look at phones and cell phones and tracking and all that other stuff of the American people they were talking about. The most surveilling president ever. He was talking about terrorism or something else, right? Well, I really appreciate my privacy, all right? And I use encrypted apps. And the day that I heard that that Donald Trump said that anybody who's using an encrypted app is a potential terrorist. I downloaded every encrypted app I could find for messaging, and I started using them. I was so irritated by that. It was just like, because I want to have a private message, I'm a potential terrorist? No, give me that. I ain't going for that, right? The other thing he said, he was going to be the most warring, not warning, war, like fighting wars, right? The most warring president. Now, whether or not he is the dude that is going to do that, to me, like, just the idea of it alone doesn't sit well, right? Now, granted, that might have been the presence that he was trying to put out there, saying like, hey, don't screw with me, right? Which is very, I mean, I can understand that, right? You don't want to seem timid or anything as a president. So putting that kind of statement out there. However, I don't agree with war, right? I'm not anywhere in my mind do I agree with any of that stuff, right? So I had a problem with that. I had a problem with those two things. And, I don't know what everybody else finds important in their life, right? But my privacy is one of them, and security is the other, right? And I want to know that what it is that we are doing is protecting our borders. That's security. Fighting wars, going out there and blowing people up for whatever reason that is given out there, I'm not down for it. Like, I'm not down for it. I grew up in a military family. I understand I understand defense, right? However, what I see happening from our military, from our government, when it comes to world policing, it's all about making sure that everybody continues to operate using the Federal Reserve note. If you do not participate in a system in which that we agree with, we will sanction you, we will blow you up, we will do all kinds of stuff. That to me is like Roman Empire coming to an end type of stuff, right? Where you take over all the nations, all the world, and you can't find anybody to conquer anymore, right? That's what's really taking place there. I don't agree with that stuff. Now, I don't have anything within me to try and change that, right? It's just the situation in which it is. I don't have to agree with it. I don't have to promote it. I don't have to fight it or anything else. But I do have to recognize that it's existing out there, and that I have to conduct myself in a way that operates around the whole thing, right? I don't know why I got off on that whole part of things, but it just seems very important considering, the election coming up, the things that are taking place out there, as far as the aggressions and all that. Focusing back here on yourself, focusing in on the things that you can deal with, right? Not putting your expectations out there on somebody else. These are the things that I think are really going to end up benefiting the people, benefiting yourself, understanding how these economic forces work. Man, I really went off. Okay, I got to go, guys. It was so much fun. I wish I could just stay out here and just keep talking forever, but I got to go back to work. Now, if you want to, like I said, if you want to really continue this conversation on, ask some good questions of not only me, but the community, we're going to be doing that live stream tomorrow afternoon, Wednesday afternoon, about 5 o'clock Pacific time. Join the channel. It's $1 a month, right? It's only $1 for you, but it means everything for me. I do a lot of research to try and bring a good amount of information to those videos so that we can walk away with a better understanding of what is happening out there. And that membership, it's gone up to like 260 members now. It's actually growing quite well, and I'm loving it. It's given me inspiration to try and bring more value to these videos, to try and bring more value to what it is that I'm doing here on this channel for you to take back and use. Like, use this stuff for your own personal gain, however it is that you need to do it. Understanding how this stuff works is the way it happens, right? All right, I gotta go. I wish I could just be out here talking all day, but I gotta go. Uneducated Economist, you let me know.